Really excited about some of the stuff we've got in here today. Bit of a focus on investments. At the present stage, most people, whether it be in your investment portfolio, your KiwiSaver, your long-term retirement, you would have seen your balances falling over the last year particularly, and then sort of bouncing along and coming up a little bit this year. Why was that? So let's dig into that a little bit more. Last year, share markets, with what happened in the Ukraine and inflation going through the roof, up to 9% or so in most countries, that made share markets fall a whole lot, and it also made interest rates increase a whole lot too. This year though, share markets have actually done pretty well. So if you're in a growth profile, things have actually started improving, and we're looking for what we think is going to be a mild recession in America, which is already priced into markets. So remember that when you see bad news all the time on the news, that markets don't see a recession and then the next day then they go down because of that news. They're already pricing that in beforehand. The big reason why people's portfolios have not recovered like they would have liked is the fixed interest part, the bonds. If you've got a bond, say a couple of years ago, which was at 3%, and that 3% bond has now gone to 7%, which is what's happened now, no one wants to pay for your 3% bond that you're holding any longer, so therefore the price of it drops. Well, if you think about that, the same thing's going to happen now that you've got these 7% bonds. If interest rates go back down to 4%, which is predicted over the next 2 years, so you don't want to be locking things in for too long with your mortgages, then everyone's going to want the 7% bond still, and so the price of that 7% bond is going to go up more. And that's going to be a real boom for bonds and for fixed interest over the next 12 to 18 months, where we're going to see bonds increasing significantly in value and really giving back those capital losses which they've given to KiwiSaver and investment portfolios, which was probably about 10 or so percent last year. And for most balance funds, for argument's sake, that makes up 50%. For conservative, makes up 70%. So we're really going to see a really big boom in those. Anyway, we've got more information in our e-news about investments and a few other cool tips and tricks. So I look forward to reading it, and we hope to chat to you again soon. Make sure you come in for a review or give us a call if you want to have a talk about anything in the e-news.